Hello and good morning everyone. Today I will be talking about financial accounting and the components of financial accounting. So as a business owner for a while, financial accounting is not just a subject for me. It is a part of my life right now. And from a small scale startup to a very multinational level of corporation, financial accounting or financial statements provide the narrative behind the numbers the organization carries, giving us an in-depth view of where the business stands, how it has been performed in past, or where it is headed in the future. Many see financial reporting as a compliance requirement, but I encourage you to view it in a different perspective. Financial statements are not just a number on the sheets, they are the strategic tools that empowers business to grow, sustain and pivot in an ever-changing corporate landscape. They guide decision making of the organization, influence operational strategies to how the work should be done in the organization to increase the profits, and build the trust and confidence of stakeholders that whatever the organization is doing is in the right direction. So, based on this overview, today we will explore the structure of financial statements and their interconnectedness, how financial statements serve as a foundation of business growth and risk management, the real world implication of financial reporting in corporate decision making. So, understanding the importance of financial reporting. It is a very financial reporting is a very what we can say important part of any organization as it provides us an overview about the organization which helps us in decision making of the organization and create transparency for stakeholders and looks for the pattern in the past and make the correct decision right now or improve the decision making so that the profits can be increased. Balance sheet, a snapshot of financial health. So while unpacking the financial statements, let's begin by looking at the financial statement basics, which is the balance sheet. While business generate revenue, manage expenses and make investment, the real challenge is understanding the impact of these activities in a structured manner. So balance sheet serves as a company's financial mirror. It reflects on all the assets, liabilities and equity at a specific point of time in an organization, and it answers the fundamental question: what does the company owns, owes and retain as the net worth? So balance sheet gives us an overview about all the assets that the company owns, liabilities that the company retains, and equity the company owes. So asset represent the company cash, inventory and property. Liabilities are the companies which liabilities are the components which the company owes, such as loans, account payables, etc. Equity is the equity reflects on the company's net worth and stakeholders' investment, which gives us an overview of all the net worth of the total net worth the company has. Profit loss statement. Profit loss statement is a financial storyteller, we can say. It gives us an story about all the revenue of the company, expenses of the company, and profitability of the company over the period of time from when the company has started. It helps us It helps us assess the operational efficiency and market positioning of the organization. So profit loss statement gives us an overview of, is the company really profitable, or is the company is having loss right now. The cash flow statement. The cash flow statement, often overlooked, is a very critically important part of the organization. This statement reveals how the money moves in and out of the business, highlighting the operational liquidity, investment activities, and financial sustainabilities. Cash flow gives us an outlook of how the organization is taking in the money and giving out it. So in cash flow statement, all the all the what we can say, cash received or the expenditures of companies, or the company has started with how much money, additional cash received, additional cash spent, total cash spent, net cash flow, all these are the components of cash flow statement, which gives us an overview of how much money has came in and how much money has gone out of the organization. Analyzing the interplay between the three financial statements that I have said before, the income statement, balance sheet, and cash flow statement, or we can say balance sheet, profit loss statement, or cash flow statement. So by doing the interconnectedness of these three statements, financial statements, the organization can analyze the trends or previous mistakes that they have made and improve it. And they can compare and correlated data across different financial statements, which gives them the overview of where the business is standing right now, and it helps them to make a strategic decisions according to the financial activities that have been performed by them. So why is financial statement important, or why does financial statement matter? One of the biggest misconception about financial statement is that they are primarily for accountants and regulatory for authorities, which is correct in a way, but I don't agree with it, because on an individual level it helps to make good financial decisions and strategic financial decisions which help us to grow. They serve as a business checker in a business environment or an organization level, as all the statements analyze and best possible decisions are made with regarding to the statements that have been done, and the spending the organization is doing. So by understanding all this and using different statements, the decision making is of course become more strategic and efficient, which in return build trust and credibility in the market, and the stakeholders tends to invest more in the companies with best decision making capabilities. So again, Financial accounting has three main statements: the balance sheet, the profit loss statement, the cash flow. The balance sheet helps helps the business to portray their financials. The profit loss statement helps the business to measure their success, and cash flow statement is used as a indicator for business viability. So financial accounting, or these three statements, is done to analyze the financials of the company and thus making strategic decisions for the companies. So by using all this, uh, the company can anticipate financial risks that can occur in near future, make smarter investment decisions, and optimize resource allocations by moving the money or using the money in development of the organization. So in conclusion, I would say, or to sum up this, I would say financial statements are not just for accountants, they are essential for business leaders, strategists, and decision makers at every level. Understanding them goes beyond compliance because it is all about strategy and all about decision making that a person can make. Analyzing the financial statements and the components of financial accounting allows the organization to forecast and manage the risk that can occur in near future, and financial components helps the organization to leverage it and efficiently create a sustainable and long term business success, which will help to create a long term profits and long term run in a market. So in a corporate world, those who can read, interpret it, and act upon financial insights are the one who will drive, you know, are one who will drive innovation, profitability, and resilience in an organization. Thank you for your time, and I look forward for any questions.